I got a lot of questions on SoFi. If SoFi right now is a good buying opportunity, is it maybe too late? The stock has been moving up. It bottomed at $6.01 per share. Now it's trading at 7.95, and it's a very bullish pattern. It's making higher highs and higher lows. It's extremely bullish. Maybe the stock has bottomed and maybe it has a long way up to go. If you look at the 5-year chart, the stock is still down 23% since it went public. I believe it was a SPAC, and now it's trading at 7.95 from as high as 25. Now it's at $7.95 per share. And you have the Fed cutting interest rates 50 basis points, long way down to go. And the question is this bullish for SoFi? Is SoFi a good buying opportunity? Or is it maybe too late? And I have to admit, I'm not an expert in banks. I don't really know much about banks, and I try not to analyze them, not to invest in them. But I did sell put options on SoFi because it was approaching tangible book value per share. And if you're buying, below tangible book, it's very hard to lose money unless they have really bad loans and really bad book in general. But it's hard to lose money. So that's where I sold put options that I made 7%. I share all of it on X if your interest rates. But I did make a big mistake in terms of calculating tangible book value, and it's much higher than $5 per share or 480, which is what I calculated. And I'm going to share it with you here in this video. For SoFi, they are somewhat of a bank, you could say. They have many different platforms, and they have a lot of members, over 8.8 million members. It grew 41% year on year. And this is something that I like very much with such business models, because they can cross-sell a lot of products to one specific customer. Let's say, for example, with Hims and Hers Health or with SoFi. If you download SoFi to invest in stocks, they can cross-sell you personal loans, they can cross-sell you, home loans, they can cross-sell you other kind of items that SoFi operates in and SoFi actually has. And then they just had to spend on advertising once to acquire you as a customer, but they cross-sell you so many different products, and it's just very efficient. And then it scales, and it's just an amazing, amazing business model. One of my favorite. And SoFi has a lot of products, and they have 8.8 million members. A lot of young people love SoFi, and they've been doing good with them. Now, in terms of the question, if lower interest rates are actually bullish for SoFi, they could be, but we don't really know. Because if you look at the lending segment, which is one of their largest segments, they have net interest income, and then they have non-interest income. Non-interest income, I believe, is origination fees. Whenever they sell all those loans, they get origination fees. The same way Upstart does. I believe that's the business model of Upstart, is with origination fees. And they have non-interest income. And it's been going down 38% because the demand for loans hasn't been the best. And for lending in general, it has gone down with higher interest rates. But their net interest income is up 20%. Now, I'm not sure what's going to happen when we have lower interest rates. I would expect the origination fees, which is non-interest income, instead of it being down 38%, for it to start going on the way up. But I would also expect net interest income to start going on the way down. And then they will equal each other. That's what I think will happen. So in terms of if interest rates or lower interest rates are bullish for SoFi, we don't really know. It's too early to tell. But this is not their largest or their fastest revenue growth business. It only grew 5%, and that's nothing. They have the other business, which is a tech platform. It grew 82%. And this is very high margin stuff. And it's one of the main thesis for SoFi, grew 82%. It's still very small, but it's much more profitable, and it's rapidly growing. Then they have their other kind of services, which is called financial services. They have SoFi Money, Invest, credit card, referral loans, and so many different things. And this grew 39%. So their different businesses are growing very rapidly, especially the tech platform. But we don't really know if lower interest rates will be bullish. They might be bullish for the valuation, but for loan demands, but net interest income, I would expect it for SoFi and for most banks that benefit from that stuff to start going down, and then origination fees will likely start moving up. Now, in terms of valuing SoFi, it's extremely hard to value, and it's hard to value banks in general. That's why I stay away. But a good old school valuation metric is price to tangible book value per share. And then you look at how fast they're growing tangible book and you try to put up numbers on it. But if you look at Ticker or most websites, it would show you that is trading at 2 times price to tangible book value per share, and that's a little bit on the higher end. But this figure is actually not true because based on SoFi's guidance, they're expecting tangible book value growth of between $800 million to pretty close to $1 billion in total tangible book value. And I did a very quick calculation. I got the total. I added it to the current tangible book value, and then I divided it by shares outstanding, and the total I got around 591 cents per share in terms of tangible book. And now it's trading at 595. If it was really trading at 2 times tangible book value, it would be trading around 11.50, $12 per share. And it's nowhere close to that. It's trading at 7.95. So SoFi is much cheaper than most investors actually believe, and anywhere around $6 per share. It's really hard to go wrong with SoFi, but SoFi will likely never trade at $6 per share again because it was just too cheap to ignore, and the company is rapidly growing. Around 19% growth in revenues. So I would highly doubt it's going to go back to 591. But another way to value SoFi is if you look at a PE ratio, because it's not just a bank, it also has a tech platform and different kind of stuff. But at a PE ratio, it's trading at 47 times earnings. And that might seem that it's extremely, extremely expensive, but there's massive earnings per share growth that's being priced in for SoFi. They grew earnings so far around 233%. It was unprofitable. It just became profitable. And it's likely going to be more profitable. They're expecting 86% in 2025, 100% in 2026, 48% 2027, and 34% in 2028. Now, even if they were 50% wrong and SoFi grows earnings per share 45%, let's say instead of 86 or 90%, then this is only one time, PEG ratio or price to earnings growth for the company. And that's extremely, extremely cheap for a growth company like SoFi. And this is if they were 50% wrong on their estimates between 86%, if they grow 40 to 45%, it would still be a one PEG ratio on the stock. So for me personally, looking at SoFi, it's extremely speculative, but the stock looks like it has bottomed and is starting, to move into the right direction. We don't know if lower interest rates are bullish because they have interest income and non-interest income. But for me personally, SoFi here could be a buy, a speculative buy, like 1 to 2% of my portfolio, and I just keep it and see what happens. That's what I normally do with those stocks. But for me, if I had to look for a growth company at 47 times earnings, and this is not even adjusting for stock-based compensation, I think HIMS, which is stocks that I own, is much cheaper for the growth and is much cheaper for many different things than SoFi at this price. So that's why I don't own it here. I did sell the put options. I made some money on them. SoFi could be a buy if you're a long-term investor, and if you did own it at $6, I wouldn't be selling. Maybe it could be going much, much higher with lower interest rates, and things could be going well for it. They have a good CEO. Maybe it wasn't my best analysis ever, but I'm not an expert on banks, but I did want to talk about SoFi since I got a lot of questions around it. And this was just my opinion, not financial advice. Thank you for watching. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.